Welcome to this brand new update on the price of Bitcoin and crypto market. Today it will be a very important video in terms of kind of fundamental analysis using technical indicators and generally technical analysis approach, because I found that some people are still having like a hard time understanding the basics, and I hope that it would be useful. And finally, also we'll look at the price today, what to expect. It is a very important situation again, and I will tell you what I have in mind about the current price action. Okay, first of all, I would like to show you the tweet which I made recently about the kind of a strategy for trading long term. You may say this is a kind of investment, but I would say it's still trading. And here is the idea. The yellow line here, you see, it's the moving average, exponential moving average on the 21 weeks period. So apparently you see that, let's say previously during the bull market 2016-17, this moving average served as a support. Here it served as resistance. Support again, support again. Here it's kind of an unknown situation, kind of a neutral market, I called it. So basically the point is, as soon as the price is above the moving average, we are having the bull market and the price is expecting to go up. If the opposite, so the price is below the moving average, the market is a bear market, and we expect the trend continues, so the price goes down. So here is the thing. I tweeted that it is wise to buy above the moving average and sell below the moving average. So people are saying that's crazy. You can't do that. Basically, we want to sell above the moving average and buy below. Sell, buy, sell, buy, sell. That's the profitable strategy. Everybody wants to do that, and that is a mistake. So you can push pause and think why, but here is my explanation. The problem is you cannot spot the highs and the lows until they are set, right? So nobody knew that would be the top in 2017. Nobody knew that was the bottom in 2018. So you can't really sell here and buy here. Yes, it is above the moving average and below the moving average, but how about this point? It is also above the moving average. Maybe you should sell here, right? And buy where? Here or here? You see, you're already in the loss. You sold here and you bought higher. How about you will sell also here? So you bought here and sold here. You also in a loss again. So it will destroy your portfolio, and you'll basically be becoming to be in the situation where you don't know at which point you'd have to make a trade. Instead of that, you may notice that we see these breakouts above the moving average, for example, here or here or here, which all of those are pretty strong. The average length, the height actually of those candles is longer than the other candles before the breakout, when the volatility is kind of low. So after the breakout, let's say here, we have the multiple tests of this moving average, and until this opposite breakout happens, we see the trend going up. The other way around, well, there were actually breakouts, but the price couldn't hold above it, so it went next candle closed below the moving average, and it happens again and again. So basically this is the bear market. So we can see the entry points. Here we can entry long on the breakout and hold this position all the way up until we'll see the end of that with the opposite breakout, and it was actually a lot of the volume as well. Many other things pointing out that that's should be kind of a end of all this euphoria. And yeah, here we should close our position. It is a lot of a profit. Then while we closed here, we can actually open short. So we are opening short here. It is something like $12,000. And we are closing that short here when we see the breakout. It's like maybe $1,000. Still, it is profit. On this $5,000, we're opening long. We're closing it only here. And so on and so forth. We're opening long at this point when there was a breakout, strong breakout. We can actually open it on the retest. There's another way. There's so many strategies, but the main point is that we're entering long, we're buying the asset when the trend is established to be bullish. So, and we still should hold. We still didn't break it, this moving average. So this is like practically applicable strategy, and it doesn't give you any sleepless nights, because basically you know what to do. You're seeing the clear signals, and you don't need to follow that like every hour or check the price on CoinMarketCap. What you need to do is entry once a year or twice a year, and then enjoy your profits. Of course, this is not the panacea. This is not the strategy which works always. Maybe next year it will be completely wrong. Again, this was like a neutral situation when it didn't work. However, in general, this is kind of a basic principle, and if you will support with some other strategies, other methods, then it is pretty good. So guys, I hope that it was useful for like this kind of a general considerations about how market works and how to ride the market. And now let's look at the current situation with the price of Bitcoin. So basically what I've told before, we had some divergences on a weekly time frame. Let's switch to the weekly time frame. You remember we had a bearish divergence over here, right? So you see the indicator highs going down, price indicators going up, price highs going up. So bearish divergence on a weekly time frame, quite powerful. What we had this red candle after that. But at that point, and again, I told you that probably was previous video or maybe a couple of videos ago. In any case, in Twitter and Telegram, I posted all of that. We have, after this drop, we already have a potential for a bullish divergence. The highs are going up on the indicators, lows are going up on the indicators, lows are going down. A bullish divergence. The candle closed green. We have a very high potential for the price going up. That happened exactly what is supposed to happen. And in fact, we reached like almost $62,000. But currently, after this bullish divergence, we have a very high chance, the same way as we had a chance to make a bearish divergence over here, we have a very high chance to make a bearish divergence again, the same which was here, right? So this is another bearish divergence, and sort of like a double bearish divergence or extended one. And if this candle, this weekly candle, today is Wednesday, but if this weekly candle closes red, and this second high is formed, then it would be the situation when the bearish divergence is formed, so we can go much lower. Pretty much the same is said by the daily time frame. So you see, highs are going down, highs are going up. Moreover, on a daily time frame, it was a very nice like a confirmation and confluence with a TD sequential indicator, green 9, which is often serves as the kind of an ending point for the trend. This is the ending point of this rise, and indeed it matched the divergence, and we already have like 15% drop from 62,000. Yeah, 15% already. So will we go further? It's hard to say, and nobody knows, but the odds are that probably yes. There are several reasons. First of all, as I already mentioned, we have like a first divergence here, and it did play out, but play out quite weak, I would say. It was not so huge drop. Second thing is, you see the increment for the highs is getting smaller. So we rose from 42 to 57. Here we rose only from 57, 58 to 62, 61. It's like a fake out. It's the often the situation which often happens when the market goes a little bit higher than the previous high, collects the liquidity over here, and you see that actually the volume is going down comparing with all of those highs. So collecting liquidity, some people are buying again, expecting another move to the upside, and instead we are going down. So basically this is very similar to like ascending wedge. It's not exactly the wedge, but it very close to that. So this is one point. Second point is this one. And I already also posted that. So you can see here that basically from last year, December, we had these rising channels with support lines, and they are getting sharper and sharper. So this angle is getting higher, bigger and bigger. So you see, after multiple tests, as soon as this support line is broken, we have the very nice entry point, the entry point for the long position. Nobody knows where, and it might be quite a bad decision to buy because the price might actually go something like that, right? But again, we need to look at some other indications. We look at those indications as well. And so far the trend is bullish, so we expect the price continue to go up, and that's exactly what's happening. So we see the second channel like that, and now we already formed the zone with the resistance previous high. This is a zone with resistance became support, and now after this second support line is with this white line has been broken, what we see the price going exactly to this support zone and has a rejection from that to the upside. And again, this is a nice entry point to buy Bitcoin. So, and you would say, okay, we have pretty similar situation. We have this support line, we broke this support line, and now we can somehow here we can get a nice entry point to buy long. Technically, yes, because it's still rising trend, and we expect it to go higher. But again, it's no certainty that it doesn't go like that. It could. The point is currently. What is the uncertainty in my opinion is that we rose here very little comparing to the previous high, so we didn't establish the new trading zone as it was with a high before that, and this resistance which should become support, it actually didn't serve as support. The price dropped and pierced through this resistance zone, and now it cannot go above it. So it's actually pretty clear to me that as soon as we are up below this zone, which is now again resistance, it's not a good idea to buy long. The risky way to do kind of an entry long position is if we see the price going to this zone with the previous high here, something like $50,000, $51,000, $52,000, and we see this zone holds and the price going up. If it happens, then I'd say that, okay, we probably will have another leg to the upside. And as soon as we are testing this area, this is another indication that, well, most likely we will break it and we'll go something like that. This is one chance, one kind of a bullish scenario. Second, even more bullish scenario is that we even don't go here, but what we do is we go directly piercing this resistance area and testing again this $62,000 zone. If we do that, probably we will break it. So far so good. Instead of that, if we see the price doesn't go here, it doesn't have a rejection from here, instead it's piercing this area, it's having the rejection, like a mirror rejection from the bottom of this zone, and this is a bad sign. That means that the odds are we are going to test that zone again. And what happens here, we don't know, but point is the strength of the trend is weakening if we don't see something like this or something like this. So guys, as usual, trading is the matter of applying the probability theory into the action here, and we are just trading the highest probability. So Let's act as it is reasonable. Let's see how the price reacts here. Let's see how it does, and that would be more reliable to go long or maybe to close your long positions, because the EMA is actually not so far away. Let's look at the weekly time frame, and it was 21 exponential moving average. So where is it? It's actually at 36,000. So if we'll go a little further in time, probably it will approach 40. So if the price doesn't rise again and will test this area after breaking this previous high zone, then it's very close, and we either retest it and doing something like that, or if it's not holding, then we can easily see similar situation to what happened in 2018 when we broke it and the bear market starts. So be careful with your trades. I hope that it was useful, and thank you very much for watching. I would like to see you next time, the next video. Goodbye, guys. Goodbye.